So I'm exploring all the time. Most of the time, I'm just exploring the deal flows that I get. You need to go with the numbers because that has been the rule so far since the time people have been investing in startups, and it hasn't changed. When there's a follow-on round happening in the startup, that pretty much gives like a small guarantee to everyone that, okay, people believe in these. If they want to join the syndicate, they can get in touch with me via LinkedIn or via email, and I'm happy to connect with them and see how we can help.
So, hello everyone. My name is Uliana Steibel. I am CEO and founder of Quorum. We are hosting our podcast, and today we have Nilanjay from a startup Wise Guys who is joining us. We would like to have a discussion about the investments and how actually Nilanjay got into syndicate management space. Nilanjay, I would love to give you a floor to introduce yourself.
All right. First of all, thank you for inviting me. And honestly, I'm not sure that I should be able to speak a lot of things because I'm still a new syndicate person. But a little bit about me. I've been working with startups almost 8 years now, 7 or 8, more or less, and especially early stage startups. That has been my forte. And last year, I decided to try something new because I thought, okay, let's take it up a notch and maybe start investing in startups. So last year I took up a course in angel investment. And after graduating from that course, along with my batchmates, I said, okay, let's try to find startups for all of us to invest in. And we created like a little community and stuff for ourselves to, do the boring stuff of running a syndicate, that is due diligence, trying to speak to the founders and everything. And somehow it worked. And we sort of liked it and said, okay, maybe let's try adding more people. And that's how the birth of a syndicate was born, just like that, over a course and some WhatsApp chats and communications. And after that, I have invested so far in 5 startups, out of which 4 are syndicate led. One is just a personal investment. This year, I've completed those 5 investments. And next year, let's see what the investment world brings to me. But slowly and slowly, I'm also trying to increase the number of investors in my syndicate, getting in touch with them so that I can increase my investment ticket size as well. So that's a little bit about me of how I entered the investment and syndicate world.
And how you actually feel about investing your with your own money and being a lead in a syndicate? What is the difference for you, and what is actually the motivation for you to do one thing, not the other?
Honestly, I think it's same thing with me because whenever I'm leading a syndicate, I also invest my own money in. So it's like a part of the deal that, hey, if I am interested in a startup and I am doing a lot of work to invest in it, I tend to also invest in it alongside with other people. And the only reason why I do that is because it helps me to mitigate my risk so that I don't end up losing money in just one startup. And I have sufficient liquidity to, invest in other startups as well. And this strategy works quite well. And I think this is quite common across all syndicates that people are out there, because when you go and tell other investors that, hey, I'm investing in this startup and here, this is my due diligence of why I invest in the startup, the positive response becomes a much bit higher and they are happy to come on board and invest in it. So it's the same experience. I tend to avoid investing alone now. I rather invest with other people, whether or not I'm leading the syndicate or not. It's just, risk management and better management of my capital.
And how you actually approach diversification of your portfolio? Do you invest only in startups, or you also have some external other type of investments?
Yep. So before investing in startups, I have been like I still invest in the public stock market, especially in India and US, and that is my, let's say, my 50% of my portfolio right now consists of public stock investments. Startups somewhere lies between 20% right now, and remaining is some other type of investments like fixed securities, bonds, gold, and all those things. So I do like to keep my portfolio diversified because with startups, the challenge is that your money gets logged in for a very long time. And let's say if you need liquidity in the next 6 months or 7 months, you have to go to the public stock market or maybe go to the bonds market to sell it off and then get the money out of it, right? So it is really important to diversify and make sure that startup investments is not, let's say, more than 30 or 40% of your portfolio, or else you will face big liquidity crunch in the future, or crisis even, I would say.
And do you actually try to diversify your portfolio within the startups into different industries and different stages, or it's mostly the one stage of the startups and one industry where you invest? Like, what is your approach to this kind of the thesis?
I tend to be industry agnostic because I believe that there are people out there who can help you understand how a particular industry works. So if you find the right people who have experience and they're also interested in investing in that startup, then the trust factor becomes a bit easier. I do follow this strategy of, like, I've started to, optimize my strategy of angel investment, and I tend to now look for those startups where the existing venture capital funds are doing a follow-on round. So, for example, in case of Startup Wise Guys, what I'm trying to build now is that I want to try to invest in those startups where the Startup Wise Guys is putting a follow-on round and they are raising, let's say, external money from other venture funds and stuff as well. Now, this is I will say, a sort of like a risk factor that I take into consideration, because let's say if a company is doing pretty good and existing investors are putting the money back into the startup without the problem of, let's say, anything losses or everything, then I feel that it becomes a lot easier for me as a syndicate leader as well to ask external angel investors that, hey, this is the follow-on round or a follow-on opportunity of this well famous venture fund, and those people also start showing interest. It's simply like that. Hey, if I take the example of the public stock market, that, hey, this XYZ company has recently launched their quarterly report and they have outperformed in the last quarter, and now their shares are slowly going up. It is the right time to invest in. So the same conversation can happen then, with the angel investors that, hey, this company has been performing quite good since last 3 years. The existing investors are putting another check in it, which is quite big, and we should also, try to take advantage and get into the back balance. So this is a new strategy that I'm trying to develop, because once again, as a angel investor, it's good to put early checks, but at the same time, you want to make money, you need to be a bit more smarter. So you can have certain amount of money for early stage investments, but you should also have another amount of money to play it safe and invest in, let's say, top performing companies of existing venture funds and all those things, to ensure that in future, maybe if your early stage investment might fail, but at least there are these investments where you had a little bit of confidence because big venture capital firms have invested in them, and that to a follow-on round as well.
I think it's actually quite interesting and smart approach, because most of the good syndicates that I saw are doing some kind of this strategy for de-risking. Everyone is approaching it slightly differently. So some of them just invest in late stage businesses, right, to de-risk
Yeah.
this investment approach. But in your case, actually picking the startups from early stage portfolio of the Startup Wise Guys, but also already those who proven themselves being successful and able to raise the next following round. So it actually makes a lot of sense. But is it your deal flow coming only from a Startup Wise Guys, or it's also possible to apply probably somewhere for your syndicate, and do you actually discover companies elsewhere?
I'm slowly building a network of other venture funds where, I'm requesting that, hey, whenever you are looking to do a follow-on round in any of your portfolio companies, please do share it with me. So I'm trying to diversify the deal sourcing as well. So right now it is Wise Guys and 1, 2 other venture funds, but slowly I'm trying to get in touch with more venture capital funds who tend to invest, let's say, somewhere between Series A or maybe a little bit below that, and trying to see if I can also become part of that deal flow as well. Now,
Mhm.
these venture funds are probably going to invest for the first time in these startups, but I still want to go and check out the deals and see whether it makes sense to maybe invest money during that time as well. So I'm trying different things just to figure out what might be make sense, because you never know that a company who has just laid a seed round might be doing pretty good, and when they go for Series A, they have upper hand in terms of asking better money, versus going to the Series A where cap table big venture funds just want to have everything to themselves and they want to be the rulers of the cap table. So I'm just trying to explore both sides of the coin and see where I can fit well. So trying to find different types of deals and see what makes sense for me. So I'm exploring all the time. Yeah, most of the time I'm just exploring the deal flows that I get.
Yeah. So if this approach really gonna work and proven to be successful, you can rename your syndicate into follow-on syndicate.
Probably, yeah. I mean, why not?
Because every syndicate have some unique specialty and some known name. So for you, it might be the good approach actually to
Correct, correct, correct. I try to be very like I'll try to play it at a very safer side because I usually feel, when you have a very small percentage of the cap table and if a startup is doing pretty good, they go for, let's say, growth rounds such as, Series B plus or something, then these big venture funds eventually want to try, or maybe not venture funds, but maybe even the big investors, let's say if some corporates gets into the cap table, they want to try to make sure that if they can buy the little pieces of other people as well, they can have bigger hand, right? So my strategy is like, even if I can sell off my shares in secondaries to these big corporates at a good amount, get maybe like a 3x, 4x return for the syndicate, people will be happy, at least they got some money out of it. So that's my future vision. I'm not really hungry for 40x or 50x. I'm happy with the 3x or 4x return. As long as, I don't end up losing my money in most of the startups.
So what do you think is a good number of startups in a portfolio to make
Hmm.
sure you diversify enough?
I mean, as a syndicate leader, there's no limit as many as you can raise. But as a individual investor, I think the lucky number that someone told me once was 20, same as public stock market. Like if you have more than 20 stocks in public stock market, then you're doing something wrong. It is better to have max to max 20 startups, good startups, and invest your money more in those startups rather than trying to keep on finding more and more startups and investing small check amount of check in them. Because eventually, out of these 20 startups, you might find five or maybe three that will be the let's say the returner for the entire money that you have invested. So you can't be greedy. You need to go with the numbers because that has been the rule so far since the time people have been investing in startups, and it hasn't changed. So I think not more than 20 startups, but I think even if you pick only 10 and stick to them and make sure that they are doing well, then I think it should be sufficient for you to just have those 10 startups. You can invest in as many as you like, but once again, you need to be careful. You do not go with the flow and just keep on investing in any startup because they are in trend or something. You need to be a bit more strategic about such investments.
Frankly, I heard from the syndicates who investing on their later stages that actually it's actually true to have about 10 startups in their portfolio. But from those who investing actually on very early stage, probably pre-seed, seed, so it's the number I heard is actually around 60. So probably you are exactly in this middle where because you're not actually investing on the first round, but you invest on the follow-on rounds. That's
Correct.
why you kind of
Yeah.
reasonably define your number of
Exactly.
startups.
So I am betting on the traction which has been generated. The early on rounds is, you might have very little traction. So it is pretty hard to understand whether this startup is going to be sustainable for the next 2, 3 years or not. But when there's a follow-on round happening in the startup, that pretty much gives like a small guarantee to everyone that, okay, people believe in this startup. There's a good traction going on. The churn rate is low. Customers are sticking around, which is a good thing. And then it is good time to now pitch in and then be on the cap table and invest in the startup.
You said that you invest, so you're actually industry agnostic, but do you see currently trends that have pick up your attention actually, and where you see the opportunities for investment?
I mean, right now, when I look at the news and everything, the trend is in biotech sector or healthcare sector. I have seen quite a lot, but I have not invested or haven't really seen any deal from that side. For me, one of the most important factor is that how much business are you doing? No matter what industry you are in, either you are saying AI, you are saying virtual reality, whatever you're trying to sell. For me, it is important to look at the numbers and then analyze whether how much can this business can grow and how quickly I can take an exit when the big people can come into the picture, right? So I don't go with the trend. For me, it is like if a business is doing good and they are consistently growing themselves, eventually they will go and raise bigger rounds. And eventually a big venture fund or a corporate investor or some big player will go and invest in them. And at the same time, when they invest, I can go and take an exit and then enjoy the money and share it with the people, right? So this is what I believe in. So I'm trying to avoid go with the trend, because with trend there's a lot of politics happen. So founders are asking for X number of money. Venture people are trying to take as much, let's say, percentage of share as possible. Not all, but just some of them. Always try to stay away. I try to find those businesses which I feel doesn't have a lot of politics. The cap table looks good, and in future I'm not going to face any legal troubles when I say that, hey, I want to take an exit, can you buy my shares? And founder said, yeah, go ahead please, or the board says, yeah, please go ahead and sell the shares and stuff, right? So I try to stay away from politics side of the thing. So, and with trends, I've always seen that when something is trending, politics is always there, and things becomes messier. So once again, my safer side of doing things comes into the picture.
Yeah, probably makes a lot of sense to avoid hype, because it's definitely a lot of the hype around the AI at the moment. A lot of the startups are competing in the same space, like for example, AI SDR solutions.
Correct.
Right? It's
Correct.
so
Correct.
obvious, and it's so many players in that space. It is very hard to guess who is actually going to be the winner. Of course, the one who gonna have the best product gonna be the winner, but
True. That's the thing.
but yeah, it's exactly probably why you in such overhyped industries, right, and niches, you need to follow on to understand really if they gonna make it. What about
Correct.
investing in some, as you said, like things like biotech? Because do you think to invest into that niche, you need to have the experts within your syndicate members, or you avoid such investments, or you actually gonna seek for the advice and expertise from external people to make sure that this actually good investment from a perspective of the science even, right?
Usually I tend to have someone who is willing to invest, because if they are willing to put their money, that means that they have skin in the game and they don't want the investment to lose, right? So I tend to prefer that. It's not that I don't want to invest in biotech, it's just that I don't have any experienced people who can help me out in understanding the deals, or they can go and source the deals, do their own due diligence, and let us know that how this business can shape in the next 10 years or 5 years and how it can grow, right? I am not afraid of investing in any other sector, but the only reason or the only thing that pushes me back is the understanding of that sector. I don't want to invest in anything that I don't understand just because everyone else is doing. I like to have a clear mind and a clear picture that, okay, this is how potentially this startup can grow. Maybe I might my imagination might fail, and the startup might fail, but again, to have a clear picture in mind as to how the startup can grow or how it can look like in the next 5 years gives a little bit of confidence, and also helps me to present it in terms of the syndicate, so that I can give them a clarity with examples that, okay, this is why I believe this startup is worth our investment, and this is how I see it growing, right? When I can tell them through a story approach and with examples, then once again, people gets a little bit convinced. People love to hear stories with facts and figures. And when they also are able to understand in their mind that how this particular startup can grow in the next 5 years or 10 years, then they get a confidence in themselves as well. Okay, let's go and try to invest at this round. So my rule is that never invest in anything that I don't understand. If I don't understand, try to find someone who does. And is that person is going to invest in that company or not? Pretty much. It's like the rule of thumb that I never break.
For someone to join your syndicate, actually, can you walk, first of all, I think, where to go to join your syndicate? And actually, once they submitted their interest, so what is the process for them?
So earlier I used to have it on publicly that, that, hey, please uh, fill out this form or send me an email at XYZ to get in touch about the syndicate investments. But now I have kept the syndicate a bit private. So I try to go and approach specific investors who can bring some of their own experiences in the syndicate. Maybe it can be the industry experience, or maybe, let's say, some sort of a network that can help the startup to grow. So I'm trying to be more strategic about that. That's why my syndicate is very small. Right now, it only has maybe 10 people, not more than that. But all those 10 people, I will say five out of those 10, maybe 5 to 6 people have certain network or certain experience that comes handy to the startups. So I'm trying to be very careful not to start adding everyone. I just want to make sure that if we are even investing in a startup, somewhere, somehow the syndicate could help them in a way, maybe through industry contacts. The investor can say that, hey, I can ask my colleagues of XYZ company to look at the product and maybe see if they can buy it or not. Maybe there can be a sales professional who can help them out for specific purposes, do some pro bono work and all those things. So I'm trying to build on this concept, and I'm happy to speak to anyone. So if they want to join the syndicate, they can get in touch with me via LinkedIn or via email, and I'm happy to connect with them and see how we can help each other out. But right now, it is more like a private syndicate picture for me.
Do you have sometimes actually the syndicate members, especially if you approach someone new, do they ask about the performance of the startups that you invested?
Yep, definitely. That's like the standard question or the first question everyone asks. That, hey, how are the startups that you've invested in doing? And usually I try to create like a one-pager Google Doc or a Word doc and share them about the summary about the achievements with them.
Yeah, and do you use any kind of the software to monitor the performance of your startup?
Not really. I ensure that they share monthly updates with me. Like any other investor, I expect a monthly updates. And usually, this is something that I'm trying to do is that at the end of the year, if the startups are happy to share their, let's say, financial statements, so that I can see how the performance has been this year versus past year, that should be good enough for me. So I'm still, because we have recently did 5 investments, so January or Feb next year, probably we will receive the financial statements of some of the startups, and then I can have a comparison as to how they have been doing, and then I can share it with the other syndicate members. So I tend to receive all the reports, and then I summarize the reports and forward it to the syndicate members, so they don't have to read the PDF versions, but only the smaller, let's say, file, like a 1 or 2 pager report which covers important information.
Thanks a lot. Actually, don't hesitate to invite them to Investory platform, which was acquired by Quorum. So we can actually help them with investor reporting and make the process more efficient and more regular, I would say, because we definitely see a problem with startups reporting. That's why the platform team usually can also help in encouraging them to do this kind of the reporting.
Yeah, I think I already have 2 startups which use Investry, so I receive reports via Investry. So already I receive the emails on a monthly basis.
Yeah, great to hear that. So, what is next for you in actually already upcoming 2025? What is your plans for you personally, but also for your syndicate?
So personally for me, that as I'm also part of, so I didn't told, sorry, I forgot to mention this. I work as a venture partner with Startup Guys, and one of my tasks is to help them raise capital for their own venture funds, right? So the next 2025 is to focus on closing one of the funds that we are raising money for. Hopefully, we should be able to do the first close by summer. So fingers crossed. And in terms of syndicate, the concept is same, trying to add more relevant people to the syndicate, trying to do at least 1 deal per quarter. So maybe somewhere around 4 to 5 deals on an average next year as well. But it all depends upon how many new members I can add to the syndicate. So these are the 2 things which are on the pipeline. So it's all around fundraising and investments for me at the moment in 2025.
I actually definitely wish you like the best good luck with the fundraise for the fund and also for growing your syndicate and facilitating more investments into the startups. I hope that actually 2025 gonna be much more positive for venture industry, and much more of the fresh capital will appear on the market because we have millennials who are joining investments, and we also have this dry powder which is sitting there and hopefully going to be deployed finally into innovations. So, Nilanjay, thank you for being with me today on this podcast, for your answers and insights. It's a great pleasure talking to you.
Same here. Thank you for that. And yeah, all the best with Coreroom and InvestPay. I mean, InvestPay, I already use Coreroom. I will definitely try to use next year and hopefully see more and more syndicates joining it as well.
Yeah, Nilanjay, thank you.